So we've talked a little bit about the Wayfair decision and then the implications for businesses. Now I'm going to spend the most amount of my time on the implications for CPA firms. I'm sorry, I know this is a lot of content and we're going pretty quick, but I want to get this part in because this is where really your focus is going to be. You know, for larger national firms, the implications are not as great as the regional or the local firm. Typically, regional and local firms have shied away from providing a multi-state sales and use tax practice due to the lack of resources capable of delivering such advisory services. Smaller firms have usually been well versed in the sales and use tax of the state they're domiciled in, but haven't always had the domain expertise or resources to staff a full-fledged multi-state sales and use tax practice. Unfortunately, that now puts the smaller firm at a competitive disadvantage. Businesses of all sizes that engage in remote sales are now reaching out to their CPAs for help. Let me give you a use case of that. I have a customer of ours, a CPA firm in Oregon. Oregon doesn't have a general sales and use tax. They have about 4,000 clients that are domiciled in Oregon. It's a pretty big national firm, or regional, we'll call it. And within their practice, they haven't ever really had to deal with sales and use tax because most of their firms domiciled in Oregon are only dealing with the physical presences in Oregon, no sales tax. But now, as they ship products across the United States, all those domiciled companies in Oregon have to concern themselves with sales tax in other states. And this firm wasn't prepared for that. This was part of the reason why they hired us, was so that you didn't have to be experts in multi-jurisdiction. But these are the things that are going to be implications for the smaller firms, even for regional firms. So what's your responsibility if you have an SUT practice or sales and use tax practice? I've kind of brought it down into 7 bullet points. The AICPA has a slightly different view of this, but this is the way I look at it. First and foremost, you have to understand the Supreme Court decision. You've got to read it in its entirety. It's not simply enough to know that Wayfair created economic nexus. There's all kinds of limitations on it, the thresholds. There's different kinds of retroactive applications that you have to think about, not for paying tax, but for thresholds. So these are things that are clearly, I wouldn't just take it off a blog. I'd actually read the text. It's not that long. It takes about an hour, hour and a half. You need to research and understand Nexus standards, updates, and implementations. What I can tell you right now is that states have already modified laws that were passed in haste. California changed its threshold. Arizona's in the process of changing its threshold. It's changed from 2019, 2020, and into 2021. It's already got a new change. So you need to understand that. You need to understand your engagement letters, and does your engagement letter need to be updated to consider sales and use tax practice advisory services under Wayfair? You need to proactively inform your client base. This is so critical. You need to be on the forefront of it. You need to understand which of your clients might have threshold implications, who are underneath Wayfair, and advise them of changes as they occur. Communicate directly with those clients that you know are exposed. So if you have e-commerce or people using fulfillment by Amazon or marketplace facilitators, and you have companies that are doing anywhere over $1 million in business, say 3 to 5 million, you need to communicate directly with them. If you're going to recommend tax technology platforms, I recommend a bunch of them. You know, give a series of them so that you don't get vicarious liability through something that one vendor, if you have a favored vendor, fails to offer your client. And then review the nexus factors to ensure that something other than sales tax isn't included. Like income tax is a big implication here. So the elephant in the Wayfair decision was that it did not just specify sales tax. It actually gave the jurisdictions the power to export their tax law. And what I mean by export their tax law is they're able to export their jurisdiction on you even if you don't have physical presence. And that could be gross receipts, business and occupations tax, or franchise tax, as in Texas just recently launching. So, you know, the next step is how do you identify exposed clients? And so if you're going to build a practice in your CPA firm, being able to identify exposed clients is critical. And the way to do that is you really have to have a champion. So I always recommend assigning an internal SUT resource as the lead. They don't have to be an expert. They can use a third-party system. That's what LumaTax offers. We offer third-party software that encapsulates our years of domain expertise into our application, so you don't actually have to be an expert, but you still have to operate the software. But you need a lead. And you need to create a plan and document it. And that plan should be documented to circulate internally and have a discussion to identify high risk clients. And what does that mean? You go through your installed base, your client stack. The average customer of Lumitax, the CPA firm, has 4,000 clients. Of the 4,000 clients, we've learned that about 22% of them are exposed at the $3 million plus rate. And that is a big deal, and I'll show you why in a future slide here. But you want to identify clients that are around $3 million plus annual revenue run rate. Identify industry verticals that are most affected. So anybody doing e-commerce, merchandisers, shipping tangible personal property, any of that. Identify business models that are most affected, right? Third-party workforces, remote workforces, merchandising, B2C. Those are all kinds of business models that you want to look at. Distributed workforces become important because you may have a physical overlay on top of the economic nexus ramifications. And FBA and other third-party logistics considerations. If you use an FBA, you have inventory in those states. It gives you physical presence in probably 25 states right off the bat. So you should understand that from your clients. You should also prepare a Nexus questionnaire. The old school physical presence Nexus questionnaire we've all used in the years past is no longer sufficient. That'll only identify one layer. You should prepare that questionnaire that considers both the physical and economic attributes, and be sure you're sound in the questions you ask. Like, you want to ask, how many transactions does your client have every year? What's the revenue dollar amount every year? Those are things that will make you think about the economic nexus attributes. And then when you survey your installed client base, you want to score their results into a quantifiable number. In Lumitax, we have a built-in survey already that quantifies it for you and tells you which clients you should spend the most time on based on that score. But you don't have to use our product, but if you don't use our product, you should make sure you quantify this so you know where to spend your time and which of your clients are most exposed. So I told you I'd talk a little bit about why I picked $3 million as the threshold. I'm going to look at this real quick, and I'm going to try to see if I can get a little pointer going here. But if you look up across the side here, you have the state, you have the sales and use tax collected for that state, what percentage of that represents all sales tax collections in the US, and then across the top you have revenue scenarios for a $1, $3, $5, and $10 million company. So when you look at those like that, if you see the $3 million company and you see the demographic population of the US and how sales tax is collected, if you're doing $3 million in merchandising revenue, you're likely to be economic nexus affected in 9 jurisdictions. So that's a critical factor. You've gone from being probably in 1 jurisdiction to 9, which is almost a 10x increase in compliance risk. And that's where the accounting community has to be prepared to help their clients. That's why I gave you that $3 million threshold as a key point. As you get to 5 million, you're in 16 jurisdictions. As you get to 10 million, you're in 30. Wow. That completely changes the game for a company that is physically present only in 1 state, call it California, does $30 million, does $10 million in sales annually, and now has to comply with 30 taxing jurisdictions. This is where the CPA community comes into effect. One other thing you need to be very aware of is that most of these businesses are using multi-source systems and omni-channel data. What do I mean by that? They sell across multiple platforms. They sell across Amazon. They sell on their own website. They sell through invoicing systems. They have an ERP system. I have some of my CPA firms have clients that have as many as 6 source systems. So you have to make sure when you're going out in an engagement that you first and foremost identify all source systems. It's not enough to just identify the GL. QuickBooks Online or something like that. It's not sufficient to get the data you need to make the best decisions for your tax-paying clients. I know that I see a lot of CPAs, they just ask for a sales by state report and they see that the sales exceeded the thresholds, but that is insufficient to properly advise your clients. You need to know the exact date the threshold was surpassed to be able to advise the client whether or not they should file a timely registration, an untimely registration with back tax returns due, or a voluntary disclosure. If you just have a dollar amount, you're going to go register without that information, you're going to be doing a disservice to your client. So identify all the source systems, get the detailed data, have an invoicing system, have the Amazon data, have the Shopify data, have the 3-party logistics data. The limitations on the GL really make the revenue reports insufficient. The integrations of Amazon to like a Xero or a QuickBooks only brings in bulk data, the daily sales, the daily receipts. It doesn't identify it at the transaction level. Remember, you have to count transaction ID numbers and the dollar amounts to get the full threshold picture on whether or not it exceeded the number of transactions or the dollar limitations in each state. There's also limitations on really source system data files, whether you have invoice level data or line level data, whether you have the date formats that have date and time and you have to truncate some of them and split them apart so you can make the best analysis, or whether or not you have the correct billing and shipping address. So these are critical things that we want you to be aware of. Also, zip codes. When you open up a file that has zip codes and you open it up as a numeric field, it's going to truncate the 0 for Connecticut and Massachusetts and start with a 02 or something like that. Using an off-the-shelf software like Excel or Access, you're going to have some things you have to deal with. In our case, if you're using the Lumitex software, all these things are addressed for you. Zip codes are corrected if they are truncated. Billing and shipping address issues are generally notified to you. Date formats are properly analyzed so you can get the precise date of exposure, so on and so forth. So these are critical factors for the CPA. So some considerations you want to think about when you're taking this into consideration is the effective date of the law, the gross or taxable revenue threshold. What do they use? Gross or taxable? The number of transactions per year. The look back period. Is it trailing 12 months? Is it calendar year look back? Is it trailing sales tax 4 quarters like New York, which is insane? Or is it the trailing 4 sales tax quarters or just calendar quarters? What's the registration date requirement? Some states require registration the next transaction after thresholds have been surpassed. Others give you a grace period, like Texas is the first day of the 4th month. Does a state have a marketplace facilitator law? Because that'll serve to, if you have $200,000 in tax collected and $190,000 was collected by Amazon, even though it has been remitted to the state, it still counts for threshold testing. The other $10,000 is remitted by the company. That $190,000 serves to offset the exposure to the company. And is the product taxable in the states where thresholds have been surpassed? Perhaps they're a software as a service company and they don't have to pay tax in that state. Those are things you want to do. Now, if you use the Lumitex software, on the left-hand side of the screen, you'll see some of the things that are identified. We handle all this for you. You never have to think about it again. But if you want to use Excel, you can do that too. And you would need to make sure that the above considerations are applied to your analysis. You would want to do a VLOOKUP for the effective dates, have all those dates in there state by state. You want to have that VLOOKUP registration date. What's the time of the registration grace period in there? You'll also want to have a VLOOKUP for look back periods, prior calendar year, trailing 4 quarters, trailing 12 months, trailing 4 sales tax quarters, etc. Also, you're going to do an @count function on the unique invoice numbers so that you don't duplicate the transaction count. And you're going to do an @sum on the dollar value so you can test the gross or taxable sales. These are all things you can do in Excel. You have to build long and detailed workbooks for that. I've done them myself. I did it to just see how long it would take me. I built a pretty robust application. It took me about 10 hours of pretty hard work to do all the testing on it and make sure it was right. And then it took me several hours to do the research to make sure I had it. And then you have to keep it up to date. So, we're doing Nexus studies post-Wayfair now. And the thing is that I always tell people is that most of us started with the physical overlay early on in our careers, and we did physical testing because that was the predominant testing standard. But what I tell people now is switch that around. Start your Nexus studies post-Wayfair with the economic nexus. Understand the economic nexus first, and then overlay physical. Because if you have the physical overlay, you may have some de minimis situations from prior periods that people didn't even consider in the past. Let me give you an example. We have a client who had an employee in a state for about 6 months. They let that employee go. The physical presence was so de minimis, they decided that they're not going to register, and they didn't have a lot of sales in that state, so they decided not to register. Now, come along Wayfair, they have hit economic thresholds in that state. And when they went to go register in that state, that asked them specific question under penalty of perjury that they had to attest to, when was the date you first triggered Nexus in our state? Well, now you have to ask yourself, do I go back and say that de minimis physical, unresolved physical presence is now my my timing, or do I lie on the application? And so this is where the critical factor has met the road, is that if you have an economic threshold being surpassed, you now have to decide that any physical de minimis situations you had from prior periods that are unresolved, are you going to resolve them now? Or are you going to mislead the jurisdictions under penalty of perjury? And that's a big deal. So you need to think about what locations you used to have. Maybe you changed, maybe you moved, maybe you had third party employees, maybe you had third party contractors. Maybe you had inventory through fulfillment by Amazon. Maybe you have additional locations or third party logistics. All those things have to be resolved now when you do the nexus studies. And you do the economic nexus ones. If you're subject to the economic thresholds and you have the physical thresholds, I highly recommend resolving those physical de minimis situations in this time frame.